Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Bruce McLachlan, who's the CEO of the Cooperative Bank. He's here to talk about the banking world in 2015. So it's a big question, Bruce, but what are you looking out to as some of the key factors you expect to influence the world of banking next year?
Big question to start off with, Gareth. Hello, nice to be here. Look, in the first instance, I am a wildly optimistic person, so I'm always looking on for positives, and I'm naturally optimistic about New Zealand. I think the banking system itself is very sound and very stable, so I think the system here in New Zealand I think has a very, very strong basis to kind of go forward with confidence. The economic situation, the global picture is one of these kind of almost once in a lifetime events. I think with the sudden and recent move in commodity prices, they are so substantial and so quick. I challenge anyone to be able to predict what's going to happen next week, let alone in a year's time, at the end of 2015. But I think, for me, I go forward with confidence, knowing that we're starting with a really sound system and a country in a pretty good place. And so whatever the global environment throws at us, I'm pretty sure we're going to be able to cope with it fine. Yeah.
We had the final OCR review of the year yesterday, monetary policy statement, etc. No surprise in terms of leaving the OCR at 3.5%. Not many people expecting it to move anytime soon, possibly late next year, but as you say, it's very hard to predict at the moment. The interest rate environment among the banks, and especially in the home loan market, has been very competitive this year. I guess we're going to see more of that next year?
Yes, and I think the forward interest rate picture has changed so much over the last 3 or 4 months that I think we're going to see quite a big transfer in value over the next year. I think my personal view is that more value is going to switch from depositors to borrowers, and that's based on a simple supply and demand. Credit is growing at half the rate that deposits are, and I think bank funding generally is really sound at the moment, but everyone's struggling to grow their asset books. So that can only mean more competitive pressure on home loans, and so I think you'll see a continued edging down of fixed mortgage rates, and that'll be paid for by similar moves in deposits. That's my view. Yeah.
So it'll be a good year to be a borrower, maybe not such a good year to be a saver.
Look, I still think if you look at inflation at 1 or probably below 1 now, I think savers are doing pretty well out of their returns in any instance. So I think there's just a bit of a rebalancing going on there. Yeah.
So in terms of the funding picture then, I mean, everyone's swamped with cash. I mean, is there going to be any pressure on banks next year? I mean, it's hard to predict what might happen in the global scene, but as we sit here today, it's unlikely to see too much funding pressure on the banks?
Always reluctant to say that, because as I say, you never know what's going to happen. But currently, you'd have to say there's a lot of cash in the system. I think clearly next year, though, with the fall in the dairy payout, that's going to impact the income flows quite substantially, and that will certainly change some of the picture throughout 2015. But as I say, the real issue is we're starting off with a really sound position, so even if it changes quite dramatically through the year, I think the system's well placed to cope with that. Yeah.
Now, we're seeing a lot of developments on the technology side in banking, mobile banking, new apps being rolled out, etc. What sort of big initiatives or issues do you see on that side of banking next year in 2015?
Well, obviously the thing we're all looking at is payments industry. I think we all understand pretty much how the kind of core banking services are developing, and they're developing rapidly, and everyone's investing a lot in that. So I think we're all looking at what is the future of payments and how is that going to transform. 2015 we'll see the mobile wallet come in. We don't know what the impact of that's going to be in terms of people's holdings of cash, and so I think that's the area I think where there's the area for most disruption from technology. It's also the area of most uncertainty, and beyond the mobile wallet, I don't think it's easy to call how that's going to go.
Now, peer-to-peer lending is also something that's come along this year. We've had overnight a huge IPO in the US of Lending Club, I think valued at around $10 billion.
Yeah.
Massive. Obviously, it's a fledgling industry in New Zealand at the moment. Is that something that's on your radar screen at the Cooperative Bank at this point?
I think everyone's watching that with interest. I mean, I think it's of interest value today rather than of something that would be concerning to the industry. I think it's one of those things is it will take a part of the market, and the question is how much. I mean, my view today is it's still likely to be, for the foreseeable future, a small part of the market that will go that way. I don't think it's going to displace kind of core bank functionality or roles dramatically in the next couple of years anyway. Yeah.
We've seen quite a lot of effort, especially among the bigger banks, of reducing their cost basis in the last few years. Obviously, the prime example being the ANZ National merger, which gave them huge opportunities to do that. Are we going to see more of that next year? And if so, where do you think banks will be looking? I mean, one area speculated sometimes is branch networks. Obviously, that, you know, in the sense of reducing cost, it would be easy. But I mean, you guys at Cooperative Bank obviously opening branches at the moment, so you must still see some value there.
Well, two aspects of that question. Where's the next wave of cost reductions going to come from, and what's the role of branches? I mean, absolutely, we still see branches as absolutely core to our future. Not on their own, only to complement what we're doing through digital as well. But our Queen Street branch, which we opened 3 weeks ago, has been a roaring success in that time, and just keeps proving to us that people still like that certainty of a physical presence, even if they may never use it. So I think branches are here to stay. Whether you need networks of a couple of hundred in a country the size of New Zealand, I think that certainly can be challenged. And we believe for us an optimum network will be of circa 40 branches rather than the couple of hundred that obviously the larger players have. So I think the next wave of cost reductions, when you look at banks, the makeup of their expense bases, personnel always makes up the lion's share. So productivity around how you deploy people and what tasks they're doing and what value they're adding. So the high value jobs, the strong customer value adding jobs in banking are here to stay. Those that are more administrative in nature will just continually be taken out by technology, I think. So I think technology and productivity will be the focus. Yeah.
You know, regulation's always a closely watched area in the banking industry. We had a obviously big financial system inquiry report out in Australia earlier in the week, and that the impact of that's going to filter through obviously the big New Zealand banks, given where their parents are from. We've also got the restrictions on high loan-to-value ratio residential mortgage lending in New Zealand, seemingly here to stay for the time being. What are the big areas that you will be watching in the regulatory space next year?
Well, the fallout from the Australian inquiry could be very significant, and if it affects Australia and the Australian banks, and it's going to affect everyone in New Zealand, would be my view. And I think if you look at the drivers of that regulation, it's really around, particularly from a banking perspective, it's around basically requiring banks to hold more capital. And capital, if the levels of capital, particularly in home lending, are lifted, then that's going to have pretty significant impacts through to customers in terms of the price that they pay. So I think globally there's pressure on lifting bank capital levels. The Reserve Bank here have not said that that's a particular issue in this market up till now. And New Zealand banks are pretty well capitalised. I mean, so that's the area that banks are particularly sensitive to, and it can impact your level of growth, impact customers significantly, and obviously quite significantly changes the return you generate. Yep. So that's the real area of focus. I think any changes in this area is going to take some time. So I don't think there's going to be sudden changes early 2015 requiring all banks in Australia to hold more capital. I think it will come out over time. So that's kind of, I mean, in New Zealand, the beyond the regulatory things that we're all aware of course, obviously we're all watching closely whether the Reserve Bank's going to plan kind of 5% house increases next year, whether that's going to be even remotely correct. And to be frank, none of us know. What we do know is right now there's been a resurgence in the market, which is probably inconsistent with the Reserve Bank's current forecast that they announced yesterday. So how that plays out over the next few months, I think, could see there's just no way the Reserve Bank, in my mind, will allow house prices to take off much above that 5% level next year. So that's an area that we'll all be watching very closely.
Absolutely, and I mean, if this resurgence that you're talking about, that have certainly come through in all the data and the figures for the last sort of couple of months that we've seen, if that does continue, I mean, what options do you think the Reserve Bank has next year?
Well, obviously, they have their existing macroprudential tools, which one is in place, and you think, but it's in place with a level. I mean, one of the things that they could do is change that level. Instead of phasing it out, they could actually bring it in more powerfully. But there's obviously, they always have the option of changing kind of capital requirements on certain home loans, particularly different LVRs. So the existing, I think, macroprudential tools, given the lead time to introduce those, would be the first place that I'd be looking at, that if they were going to do anything, it'd be within that existing toolbox. Because the lead time to do anything else is quite significant.
Absolutely. Well,
Yeah.
it'll be an interesting year, I think, Bruce.
Yeah.
And look, appreciate your time. Thanks for coming in today. That's Bruce McLachlan, who's the CEO of the Cooperative Bank, and I'm Gareth Vaughan at interest.co.nz.